Welcome to the C-Suite podcast with me, Russell Goldsmith, and Graham Barrett. We are here at Money20 Europe in Amsterdam.
Yeah, we're producing these episodes in partnership with LHV Bank. We've got an absolutely brilliant lineup of guests to bring you here on their booth at the event, and I really hope you enjoy these conversations.
So it's actually a welcome back to the podcast to Moshe Winegarten, the Chief Revenue Officer of Ecommpay. Moshe, good to see you again.
Thanks, Russ. Great to be here.
Yeah, thank you for joining us again. Last time we spoke was in Berlin at MPE. Indeed. We're now here in Amsterdam at Money 2020. That last interview, you highlighted the fragmented state of payments across different countries. Is this growing diversity of local payment options ultimately a good thing for merchants and consumers? And does it add more friction and flexibility?
It's a little bit of both. I think the reason why these payment methods evolve is because they're solving a problem. Right? And suddenly in developing markets where there might not be good card penetration or solutions, right, a method has evolved because it's better than what's been before. So that's a great thing for consumers, and ultimately it's good for merchants in those markets. But then if you have a merchant or business which is expanding, and you're in one country, 2 countries, 10 countries, there is a complexity because you need to now solve for multiple payment methods within there. So it's obviously a challenge which needs to be accommodated by kind of growing businesses as they kind of globalize. But I think we need to recognize that these payment methods, especially they've got some level of success. It's because they are solving a pain point generally for consumers and businesses within those markets, and that's ultimately a good thing.
Okay, I want to talk about one of your partnerships. You've recently expanded a partnership with Token.io to bring virtual accounts to new markets like Spain, France, Ireland, and here in the Netherlands where we are today. What have been the implications of this partnership?
So we've been, supporting payments and specifically open banking payments for 4 or 5 years. So we were quite early on in that space. And the approach we took was actually open banking orchestration. So we're not a PISP ourselves, but we connect to multiple PISPs, which allows us to provide combined reach across multiple PISPs for our merchants, because they're connected all into different banks. Resilience, because there's different uptime, and we're able to route between different PISPs and kind of reach banks and accommodate that. And we started to also work with specialized PISPs within various regions, within sub-regions within Europe. What we found though was the challenge, although that did help and improve kind of success rates within open banking, the challenge was local banks within those markets and how they reacted to sending money to other IBANs in other markets within Europe. And what we've been doing now, and together with our partners at Token, is adding localized IBANs. So on behalf of our merchants, whether they may be in UK or Europe, etc., to provide a localized IBAN within each specific markets, especially where there has been some challenges in open banking, and we are seeing a marked kind of improvement in success rates in open banking by doing that.
What challenges does that present then, and what can be done to stamp it out?
Whether this, I guess it's called IBAN discrimination, whether it's intentional or unintentional, some markets, a local bank will just push an extra check to their customers, going, these funds are being sent out of the country, yes, within the EU, and therefore, double check or double confirm, right? So I get it's an extra security measure, but it also adds a layer of friction, which does reduce success rate. And in some markets, I think it's a little bit more obvious, IBAN discrimination. It ultimately needs to get pushed, from a regulatory level up at the central bank and regulators within those markets. I think it's a shame, obviously, for consumers and for businesses. It's not what was intended. So I think there have been initiatives and a number of fintech players who have been lobbying for the regulators to push for that. But in the meantime, we can wait for that, or we can get on with it and solve for it, and that's the approach we've done. We've gone out there and worked with Token to get localized bank accounts within those markets, and that is solving the problem in another way.
Whilst they're all part of the EU, do you see many differences in those individual territories at all?
Definitely,
right.
Yeah. Whether it's at a central bank level or individual banks, whether it's been standardized. I think UK was very good. Germany's become very good at kind of standardizing in those. Some of them it's for no fault other than it's extremely complex market with different processes within those markets, underlying the rails. So there is definite variation from country to country, and some of it is also just consumer behaviour and adoption.
Yeah. Final one for you, Moshe. Where do you see the most exciting momentum in real-time account-to-account payments, and also how is Ecommpay positioning itself to capitalise?
So, I think I've said this before, but we're seeing momentum definitely in areas where there's movement of money. So I don't think there's been the uptake in regular retail, purchase and refund, and for various challenges, whether it's lack of USP or at least from a consumer perspective, or consumer protection, lack of consumer protections, all those various things. So that it hasn't been so hot. But in areas where funds are being moved, so topping up a neobank account or remitter or a forex trading or paying, making tax payments. And I think in the UK, for example, one of the biggest ones is kind of paying off your credit card balance, so sweeping from your debit, your current account into there. Those, significant growth within those areas, and I think we'll see more, certainly within that space. I think there's a little bit of market variations. So some markets, adopting faster than others, but definitely within those kind of verticals where we're going to see it across those. And I think in time we'll get a little bit more penetration within the retail space, but it's highly competitive, and at the moment, card solutions are very strong.
Always good to have your contribution to the podcast, but for now, Moshe Winegarten, thank you for joining us.
Thanks, Ross. Great to be here.
Yeah, pleased to say that I've been joined on the sofa by Angela Hull, who is SVP Global Payment Partners at PPRO. Angela, how are you today?
I'm good, thank you. Thank you for having me.
We've spoken prior to this event. You told me you spent your entire career in the payment space, seen the evolution of the payments industry. So what's changed over that period?
Yeah, so I think, look, I have a 30-plus year career in the payments industry.
I didn't want to say that,
I know,
that's fine.
Thank you. I'm trying not to give my age away, but probably inadvertently massively given my age away. Yeah, look, I think so much has changed, and yet nothing has changed, I suppose when I look back to the early 90s, when I started my career, and it was very much Visa, MasterCard, and not a great deal else. There wasn't really even, debit cards were a thing of our dreams. So I think things have maybe changed since then. But I think, in looking back now and obviously been through so much change in the payments space, when I think about where we've come to now versus where we were in the 90s, it's the technology that is driving us forward. So it's very much what's old is what's new. And, if I think back to when I first started work, and you could go into a department store and buy whatever you wanted, and you just post-dated checks, which, looking back, was probably pretty
very
horrific.
True. Who remembers? I remember that as well.
I know, right? And so, if you think about buy now, pay later in today's world, the concept is the same, but it's the technology that is driving us forward, and I think that's what's really, really interesting.
Yeah.
So things that feel really, really new, actually, I think, what's old is what's new.
That's a great analogy. I really like that. Yeah. Okay, well, let's move on to local payment methods. I'm thinking of the likes of Pix in Brazil, UIP in India. Obviously, they're booming. We've spoken a lot about that on this podcast. What do those success stories tell you about the future of global commerce, cross-border payments, things of that nature?
I think it really shows that the consumer will drive behaviours. And as much as we try and force them to behave in certain ways, it doesn't work like that. And I think if you take Pix, for example, pre-pandemic, nothing like that. It was the pandemic that drove Brazilians to spend online. And, you just need to look at Pix and how that's grown really massively. It's a huge success story. Yeah. And then I've been working in and around India for at least a decade now. Right. Pre-monetization, nothing like this. And then UPIs come along. And again, that's really, really grown, and it's massive within India. And now we're looking to how can we work together to sort of expand that so consumers can spend outside of their home market.
Yeah, because it's interesting that you think, well, do we need something like that in the UK and Europe? But then I guess, do we have... What's the answer then? Yeah,
I'm not really sure what the answer is. I think these things, sort of a desire to do something and a gap in the market drives things, to drive solutions, drives innovation. And I think probably we're a little bit in a different space in the UK. There's a maturity there that sort of wasn't there. But I think some of the markets are still ripe for this kind of new and innovative and the incubation of that sort of thing to drive it forward.
Now, of course, the challenge with all this kind of fragmentation is the regulatory requirements.
For sure.
How do you manage that? How do you make sure that you're, applying all the necessary checks?
I mean, huge, right? I mean, you don't want to make the mistake
No,
and
absolutely.
inadvertently, frequently disregard. I think the key is always being aware and having a team that are constantly watching. I mean, there's nothing certain around. It's not going anywhere. It's just going to get more and more and more. And we can't just walk into minefields inadvertently. So I think we need to be constantly watching what's happening, where things are moving. I think the way forward to do business, I think, is less about making retailers and merchants move domestically, which is just fraught with regulation, taxation laws, and a huge amount of complexity. I think it's about enabling consumers to spend using the method that they are comfortable with outside of their home market. And I think that's where you're coming up with solutions that work within the boundaries of any kind of regulation.
Yeah. Now let's move on to some PPRO news, because you've announced a partnership with EPI, haven't
Yes.
you? Talking about local payments, Wero is potentially the solution for Europe. So what are your thoughts on that? Can it really be the game changer that it promises to be?
Yeah, I really think it can. It's very well considered. We're super excited to have done the partnership, of course, and we've been working together from the very beginning. So, I think where the sort of keystone of its success is that they've gone consumer first. So the consumer will drive that behaviour. They've worked with Ideal. They've brought them on board. They've got that infrastructure. It's the consumer right at the bottom of it. And then, we're working really closely with them from our side of the house to bring the experience of what works on the merchant, the payment service provider, so that together we can come up with a really neat and slick solution. But I think that the key for its success is that it's consumer first. It's that way of thinking.
And how far can it actually go? Could it take on PayPal, for instance?
Yeah, I really think it could. I think, the thought process and the diligence behind it, I really think it can go that far.
Interesting. Yeah, we're really keen to see how that space develops. And thinking about partnerships like that one with EPI, what is the key, in your opinion, to forming those partnerships? What's crucial from your...
Key for me is diversity of experience.
Right.
So, when looking for a partner, you want them to have like-mindedness, a desire to move in the same direction, of course. That's the fundamental. But it's about not having that arrogance of we don't all know everything about everything. So let's combine our diverse experience together, and that's the sort of key. But you've got to have a joint desire and an ability to work and an agreement that we're going to work together at a certain timeline.
Well, yeah, I think that's absolutely key. It's and we've spoken a lot about partnerships today. So it's really interesting to hear your take on that. We'd love to have you back on the podcast to see how Wero and EPI works out. But for now, Angela Hull, thank you for joining me on the podcast.
Thank you.
So joining me now is Robert Kraal, the co-founder of Silverflow. Robert, thanks for joining us.
Thank you for inviting me.
Now, let's start with the current embedded finance landscape. How do you assess it, and how much of a transformation is it making to the financial sector?
Well, I think it is there. So we see many companies, big payment service provider companies, but also more specialized companies diving into that space. So it's big. It's getting bigger, and I think it's extremely important for particular mid, small retailers to get access to the different type of embedded finance services. But you see different applications. I think there's a great market for it.
How do you see it playing out? I mean, who ultimately is going to be the winners and losers?
Yeah, I think to a degree, the banks should be in a very good position because they, of course, have all the experience of handling the financial elements of that. But they're not having the best persons or the best companies to run the technology. So that's where they're lagging behind. And that's, of course, the gap where many younger companies, startups or other specialized companies jump into. They are more tech savvy. They may not necessarily have the financial expertise. So I think ultimately, if the banks do a good job, they could be the winners. And if they don't do a good job, they lose the business to much smarter, faster integrating, innovating companies.
Yeah. Okay, let's move on to cross-border payments. Is the idea of banking without borders still realistic in such a fragmented, regulated regulatory environment, or do you see more value in deeply localized strategies?
Well, there are, of course, a lot of companies and individuals who want to make cross-border payments. So whether it's complex or not, for me, that's not so relevant. There's a need from the market, whether it's B2B or B2C or C2C. And yes, if things get more complex, that means that it's more complex to build your business out of that. But that probably also means you can get a bit bigger margins, or if you're very good at that. So I think it's that the landscape gets more complicated from a regulatory point of view, means that companies have to step up and actually get their stuff done. But the demand is there.
Just moving on to the merchant's perspective, from faster settlements to fewer chargebacks, merchants are demanding more than ever.
Yeah.
What's the biggest gap between what merchants need and what most payment providers currently offer?
Well, I think it depends a bit on the size of the merchants. What we think is that the merchants, they want to understand more what's really happening behind all the interface that they get. So they're interested in the real data behind what they're seeing. And the data can include, for instance, about conversion. Why are transactions declined? It can be about risk. Why did you decline a risk transaction? It can be about chargeback. Why was it chargeback? It can also be, for instance, around pricing, conversion costs, settlement times, etc. Why was this transaction settled in 2 days where the other transactions were settled in 1 day? So it looks quite granular, lots of small nitty-gritty details, but we see particularly the larger retailers who quite often are experts in payments themselves as well. They want to get more control and really understand all the nitty-gritty details. And then the gap that many companies don't provide that detail yet today. They can't. They have sort of black box scenario. Yes, you send transactions in, you get a sort of conversion, and you can look a little bit about refusal rates, risk rates, etc. But I think that many, particularly the more educated retailers, I would say, are looking for more in-depth information of the whole process.
Okay, let's finish off with a little bit of Silverflow news. Want to talk to you about your partnership with Bolt.
Yeah.
How does it work, and what are the implications of this kind of payment structure?
Well, of course, Bolt is a platform retailer, but a platform supporting the retailers. We are a technical processor. So the challenge that they had, and many of these type of big companies, they have a good relation with their bank for treasury service, FX service, the settlement, they may have credit facilities, etc. So they have a big relation with their bank. So from a relation point of view, they might want to have the payments done by that bank as well. But quite often, these banks, they don't have the right technology for this particular retailer, because the retailer might have this specific request. For instance, what we just discussed this in the last question, for more data, insight, etc. So if the bank doesn't have a platform to support that, this retailer is almost forced to look for another provider with a better solution. So what we've done in this case is we've sort of mitigated that particular problem. Bolt could still work with their existing bank, their loyal partner, their acquiring bank, where they do a lot of other business with as well. They didn't want to use their technology, so they're using our technology. Essentially, Bolt connects from a technical point of view to us. We route the transaction straight into the card networks, but we're using the bank's license for that. That means that the bank keeps their commercial, legal, compliance, financial relation with the customer themselves, as just their customer as it is. But the Bolt in this case chose us for their technology provider, so they get the best of both, essentially. Get access to all the data and the elements and the tools and the functionality we can deliver.
Excellent. Well, listen, good luck with that moving forward. But for now, Robert Kraal, thank you so much for joining us.
Thank you so much.
Joining me now is Asya Karakus, who's Head of Payment Partnerships at SumUp. Asya, thank you for joining me on the podcast.
Thank you for inviting me.
Not at all. Now, we're here at Money 2020. What are your thoughts on the main talking points at this year's event?
So this is my actually year 10.
Wow,
in Money
10 years,
2020.
come
Yes,
on.
so I'm celebrating my year 10 there.
Your decade. Well done.
And how the conversations evolved in the last 10 years are amazing.
Yeah.
Even from last year to this year, there's a big shift. This year, the discussions are pretty interesting, actually.
Okay.
And I have seen a lot of interesting discussions around digital DNA and digital ID, and how important it's going to be in the next few years in the payment industry.
Okay.
And I started believing in that though. Like, I'm very, very interested topic, and also the embedded intelligence part of how the payments industry will be embedded into the different industries that was partially done before, like gaming, gambling, or anything else that we have not thought before. Pretty interesting. All the improvements that has been done, and also the governance part.
Yeah, well, let's move on to that governance part, the regulatory framework, if you like. How is that influencing innovation in the payments landscape?
So here we are in Money20 Europe now, but past months in April, I was in Bangkok in Money20 Asia, and half of the participants was either the fintech associations or the regulators, because of the speed that it grows both in Europe and in Asia. Now the regulators are trying to understand how to regulate the industries that they haven't regulated before, like blockchain.
Yes.
So the regulatory sandbox concept is back again, as far as I understood, both from the shops here and in Asia. And there are a lot of discussions on splitting the regulatory sandbox. So as the concept, regulatory sandbox is a program that allows you to operate as a fintech player in an area for a given period without the need of applying for a license. So it's easing the need for the license and just allowing you by the regulator to go into a new country and expand into a new country. And we started it picking up again because of the new topics that we are discussing here, like blockchain. And one deputy governor from Sri Lanka, for example, and also Philippines, told us they are doing it because they don't know how to regulate.
Okay. Where do you stand on blockchain then? How close are we to that going mainstream? What do you see as the main use cases for it?
So for the blockchain, as we all are speaking about it, like AI will be the driving one, and then we will see how to differentiate between the buzzword blockchain and how we really use it and leverage it, also, especially between the concept of AI. I believe it will be the topic for next year and how it evolves between this year and the next year will be or in the next few years.
Okay, so that's your tip for the podcast. Come back next year and
exactly,
blockchain will be the key.
My year 11 at Money20, we can discuss about it.
Excellent. Now, as I introed you at the start, you're head of payment partnerships. So I'd love to ask you about the importance of partnerships and more how you form those partnerships. What's important when you're looking to build a new partnership?
So we try to look at the partnerships holistically because SumUp today is present in more than 30 plus countries and the only global POS acceptance player, originally POS acceptance, now being multi-product in many areas. And when we set up partnerships, for us, what matters is that we are set up for success. And it's a win-win partnership. And this is how we look at our banking partners, acquiring partners, whether it's a local scheme or an international scheme. What we try to pick and also collaborate is the partners where we can leverage on a global scale. So rather than going in one local partner where can only help us with one specific product, we are looking holistically now, especially now that we have a footstep also in Australia. From Australia, and we launched last week actually in Mexico.
Okay.
So we are going for international players that can support us globally.
Okay, well that was leading on to my next question about what's next for SumUp and maybe what's next for the industry as a whole. Obviously, you've given us one tip, which is blockchain. What else do you see influencing this landscape and where can SumUp go next?
So as SumUp is a payments company and a PSP, for anyone, any players, including us, closing the loop is becoming way more and more important. Because a couple of years ago, we started talking about the super apps, multi-product, omni-channel companies, where one offering one product is not the winner anymore. And that's what SumUp has been working on. Originally starting from a POS acceptance point of view, developed a lot of products in between to close the loop, now offering business accounts, cards, cash advance, a consumer wallet and many other products like invoicing around it. Closing the loop will be the next challenge. And
closing the loop, there you go. That's going to be my takeaway from this conversation. Asya, Karakus, thanks for joining me on the podcast.
Thank you for the invite. See you next year.
Okay, joining me here on the sofa is Phil Hardin. He is Commercial Director at Cashflows. Phil, thanks for joining me.
No, you're welcome. Thanks for having me.
How's your Money20 been so far?
Very busy, but very, very good actually. Yeah.
Busy is good?
Very busy, very good. Huge amounts of really interesting conversations around all the things we're trying to specialise in, so it's been good.
Yeah, well, let's start with the buzz phrase, embedded finance.
Yes,
so that's
everywhere.
always a key talking point at events like these. Now, what do you see as the biggest driver of embedded finance among ISVs, ISOs and PayFacs right now?
So I think there's a number of things. Three things spring to mind mostly. So firstly, market dynamics are changing. So if we think about how a merchant picks their payment provider, today 70% pick it by going out to acquirers and selecting one. 30% pick it through their ISV or their software provider.
Got it.
It's predicted over the next 3 years that will just turn on its head.
Right.
So if we think about as an acquirer, how you're going to market completely shifts. So suddenly embedded payments are really important because that's essentially the new route to market.
Right.
Secondly, I think there's a far more education around the power of payments. So it's always been seen as a cost in the past. Now I think it's far more understood around how you can monetize and add value through payments. And then thirdly, I think ISVs, ISOs, PayFacs, they just want more ownership of the payment journey. So you're very incumbent and beholden to your acquirer. So how can you take a bit more ownership back of things like your customer experience, your boarding journey, your underwriting, all elements like that. So I think those three things mean that embedded finance, embedded payments are becoming incredibly important.
Now, there is a lot of noise around embedded payments. There are lots of companies who are maybe doing similar things, trying to find the right solutions. How do you separate those two things, the noise from the meaningful solutions?
Yes, and you're absolutely right. It's everywhere. And I'd be surprised if an acquirer doesn't have a strategy to tackle embedded payments, embedded finance.
Yeah.
So I think there's two things. One, I think it's really understanding the objective of that organisation. And I'll give an example. You could go and see an ISV that's fairly up and coming, it's new, they probably don't have a huge amount of merchants yet. Their objectives are going to be very different to a very established ISV who might already have connections with 8, 9, 10 acquirers.
Right.
So understanding those objectives and then how do you meet those objectives? So I think flexibility in different payment models. So for example, if you have a very, very established ISV, they might want to go down the journey to become a payment facilitator. So how can we help them along that journey? If you go to a fresh ISV, they might just simply at this stage want to be a referral, or we can help them to move into an ISO model and take a bit more ownership about the customer management. So I think being able to offer the different payment models, understanding where they are on their journey and their objectives, and how can we help them take more ownership and move up the payment chain.
Okay, and let's finish up with a couple of your partnerships. So the first one with CardStream.
Yes.
Which positions you to help platforms simplify compliance and accelerate go-to-market. Would that be correct? And what does that partnership
What does
mean
it
to you? Yeah.
It absolutely does. So if we think of the US market, and it's one we think will emulate over in the UK and into Europe, of all of the ISVs, 48% of them have become payment facilitators.
Okay.
Whereas in Europe and the UK, it's only 8%. And the reason being, to become a payment facilitator, you have to build underwriting, risk management, transaction monitoring, boarding, contract, I can go on and on and on, as well as getting licenses. So if you think about that investment, that's 2 years worth, a heavy spend, and then there's a cliff edge where you can then start to try and monetize that. Through our partnership with CardStream, we can now give a modularized approach to do that. So they built a fantastic platform that essentially provides PayFac as a service. So you can do it all on that platform.
Right.
We can acquire, and then we can share, use our licenses or CardStream licenses to then enable them to become a PayFac Lite without necessarily having to get licenses straight away. So suddenly you can monetize becoming a PayFac on that journey within 3 months, as opposed to this massive build. So I think that will open up the market.
Excellent. Okay, and then the second partnership is with a really interesting one with India's M-Swipe.
Yes.
Okay. So obviously that's more about global fintech collaboration. So what is that going to give you?
So it's a really interesting one. So M-Swipe, a huge, massive acquirer in India. They want to break into the UK market. When they came here, they really struggled finding an acquirer that would be able to help them in the way they wanted to be helped.
Yeah.
So essentially they've already a processor, they're already an acquirer, they've got all this kit, superb technology, great front ends. The only options they had to come to the UK market were either become an acquirer, it's a 2 to 3 year journey, incredibly complicated when you don't know the market, or use someone else's acquiring capability and become like an ISO or a partnership of that respect. What we've managed to do with M-Swipe is they use all of your kits, but use our licenses. So use our expertise, our knowledge around risk and compliance, our relationship with the schemes and the FCA, and you'll do everything end to end, but we'll receive settlement and pay you back, and you can pay your sub-merchants back. So we've allowed them to enter the market far quicker, far less cost, far more risk-free, which means that we'll be going live with them in the next sort of quarter.
Okay.
So really exciting.
One final question for you, just about partnerships and collaborations. in general? Because I think a lot of the conversations I've been having today are about that, increased collaboration, increased partnerships. Do you see that as the kind of way forward, forging these partnerships and trying to find solutions together?
You have to, 100%. So we are partnership led. We are an organisation that we pride ourselves on almost enabling other payments organisations, ISVs, and helping them on their journey. So without that, I think the market is going that way. I don't think you can survive now without partnering, particularly in terms of capability. The wants and needs of merchants and their consumers is getting bigger and more complex. To build it all yourself is virtually impossible. You have to partner. So how can you effectively partner and effectively help your partners in the background? That's what I think.
Well, sounds like you're doing it very effectively. So Phil Harding, thank you for joining me.
Thank you very much. It's been a pleasure.
A big thank you to our partner LHV and to all our guests for taking the time to come and speak with us at Money 2020.
Don't forget, if you've enjoyed the show, please do give us a positive rating and review on your favourite podcast app. But for now, from me, Russell Goldsmith and Graham Barrett, thanks for listening and goodbye.